Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. So in light of the recent events on Great British Pound, we just can't ignore the action that we see right now on this currency, and that's why the setup that right now we see could be formed here. It's really very attractive and has significant potential in a medium-term perspective. So situation has changed rapidly on the cable recently, mostly due to the hawkish statements from the Bank of England representatives. And as you know, they have given the hint on the possible rate increase in a short-term perspective. This event probably will not take the form of some long-term rate cycle, and probably it will be short-term. So maybe 1-2 rate increase will happen on Bank of England. But for the short-term traders who trade on the daily chart and intraday charts, that could lead to really significant and impressive rally on the daily chart. And currently, guys, a lot of interesting fundamental information around the Great British Pound that we have tried to put in the new weekly research. So if you're interested with that, you could read it. There, the new report from the Fathom Consulting. So they really shed some light on situation, why this rate increase should happen. But at the same time, they also talk on the possible 1-2 rate increase on Great British Pound. And in 2 words speaking, they expect that this rate increase will happen most probable month where it could happen is August. At the same time, in the long-term view, in perspective of 1-2 years, the situation on the British Pound still looks bearish, mostly due to the real problems in the United Kingdom economy. So, and still, we should not ignore the possible significant rate increase by the Federal Reserve that could happen in 2018. So that's also our position, that we think that in 2017 there will not be no rate increase from the Fed, but in 2018 it's really strong pressure for the rate increase cycle will happen. Taking this all together, we think that new informational background, the new fundamental inputs change situation in the short term. So within a few months, Great British Pound could change the direction and show significant upward action. But in the longer term perspective, that will be probably the temporal relief, and it will lead to just deeper retracement, higher retracement on the monthly chart. Actually, guys, to change situation on the monthly chart, Great British Pound should exceed 1.72 level. It's really far, and currently will happen very soon. Currently, we're mostly watching for 2 possible destination points. The first destination point in the short term that we will discuss today, that is 132.50 area. The second stands approximately around yearly pivot resistance one around 142 area. So right now, let's talk on the technical issue. On the daily chart, guys, actually market has stopped upward action right at our predefined level. We said that the sale for the week will be around 130.50. This indeed has been completed. This was former weekly pivot resistance 1 and take a daily overbought. That's why we said in last week that hardly market will exceed this level. This indeed has happened. At the same time, the actual target for the short-term rally stands at 132.50 area. So this is, as you can see, target of this A, B, C bottom 1618 extension pattern. And also, guys, here we have weekly butterfly. So this left wing, this is right wing. You could call it the butterfly, you could call it the hand and shoulders here. It doesn't matter. But the destination point of it stands also at 1618 extension of this butterfly. It's approximately at the same 132.50. Also, guys, actually, if we will measure the classical target of the hand and shoulders, let's see what we will get. Right, approximately the same target. So that's simple. And that's the level that we will use as the target. For trading, guys, we need nothing but this recent rally. Why? because here, guys, here has how market motion develops. So this is extension mode, retracement, major retracement on the completion of the 127 extension of the butterfly, and ABCD target of this ABCD pattern. Major retracement already has happened. It means that this is following by the normal market mechanics. This should be new extension. That's why here we should not get any deep retracement as this one. All that we need to get here is just minor retracement inside of this swing, because any deep retracement here will break the normal market behavior, or will break the normal market mechanics. Because when the retracement already has been completed, something new big move down will mean that something is wrong with this upward extension. I hope that this is not really sophisticated. So that's why we will be focused for taking the trade only on this most recent rally and on some intraday levels that we have on the 4-hour time frame chart. So by taking a look at the 4-hour time frame chart, what we have? First of all, market has completed the target of this double bottom. So we will measure the target distance from the bottom to the neckline, count it to the upside. You will get the market has completed this target. At the top, market is forming here the double repo sell pattern, as you can see. It has been completed yet, but if market will show the close below the 3x3, this will be double repo sell. So here we have a lot of different levels, guys. First of all, we have first confluence support around 128.80, 129. Second confluence stands at 128.30, 128.60. Okay, and all these levels is combined by the different pivots. Here is the weekly pivot point, monthly pivot point for the July, weekly pivot support one, monthly pivot support one. Okay, so let's try to estimate first invalidation point with a possible setup. As we said, retracement should not be too deep, and I think that market should stand above this strong support cluster. So it should stand above the 128.30. Why? Because first of all, because this is very strong levels. Second, because this is weekly pivot support one, and we know that when the market stands on an upward trend, it should not drop below the pivot support one. If this will happen, it will mean that this action stands on the hazard of destruction. Finally, even from the point of view of the double bottom pattern, the breaking down the neckline and returning back in the consolidation of the double top will not be the bullish sign. That's why our invalidation point stands approximately around 128.30. But it's not the fact, guys, that market will reach precisely this level. So it could happen that market could reach only this confluence or complete, for example, double repo target around 128.60 and turn up. So other words speaking, you should think about the taking first position somewhere around this area, around the first confluence. Maybe this will be just the part of your whole position, but here some position should be taken because market could just test the weekly pivot points, test the confluence, and start to move up. This also could happen. If market will start dropping slightly lower, here we could add a bit more. Be prepared to really far standing stops because we're playing trades on daily chart. This chart has more extended swings and generally considers real significant volatility on the market right now. That's why the stop should be placed. The first stop should be placed really far. At least it should be around 128, but better if it will be somewhere below the monthly pivot support one and below this major fib level initially, just to make market some room to breathe. As soon as upward action will be reestablished, you could move the stop below most recent low that will be formed on this retracement. So that's the inputs. That's why you need to adjust your trading volume correspondingly so that your stop will not be the disaster stop. Your money stop should be approximately equal to your regular trade. For example, I personally I not risk more than 2% of the assets in any trade. So usually it seems normal when you risk 3% of your assets. But this is normally try to calculate your position from that amount of risk. So if it will be too long for you, too far stops, in this case you could try to get the minor retracement. For example, if we will get major retracement, market will reestablish upward action, you could try to take the position on some minor retracement on this reestablishing of the upward action. It will be more difficult to do, but in this case you could try you will be able to use tiny stamp. So that's the setup that we have on the Great British Pound right now. It's really interesting and has really significant upside potential. That's why I think that's worth a lot of attention. And let's keep watching how it will develop in the beginning of the week.